Welcome. I'm deeming this week my borrow lend cryptocurrency week. Every day I'm going to be talking about multiple borrow lend protocols. First, my disclaimer, I'm Brian. I'm a big dumb animal. Don't do what I do. Take a screenshot or pause here if you want. If you're interested in any of these trading platforms, there's bonuses, links down below, QR codes. You can invest crypto in an IRA. Save yourself the tax burden. And lastly, if you wait to the end, you'll hear all about my crypto school. We're going to look at 3 of them today. Now, these 3 I'm putting together because they are all primarily lending to institutions, institutional lending, like private credit markets. In many cases, unlike a retail investor like ourselves who might want to take a loan for whatever purposes, these are to businesses. It's a huge market. And these 3 tailor just to those, so might as well look at them together. What's interesting to me, and the reason I'm doing these borrow lend protocols, is in many cases when we think about crypto, we think about something new that's never been done before. But also, decentralized finance has really taken off. We're talking about billions of dollars already, and it has a long way to go. And I really believe that borrow lend is going to take over our traditional borrow lending, particularly because many of us, for the long term, are going to want to hold on to some crypto, not sell it, take loans against it, just like you would against stock. Let's get into these 3. The first one's Maple. If you're not familiar, it started out as, well, it is Maple Finance, and the token changed, and now it's syrup, maple syrup. Very, very funny. So let's look at, I'm just going to go through these, looking at a couple things. The market caps, give you a quick overview of what they do, and then we'll look at their pricing. So Maple Finance here, infinite supply, some of them can mint more and burn. There's various mechanisms to do that. But their market cap and their fully diluted is around 470 million. And if we look at what they do, currently they have assets under management of $3.3 billion. That's significant. Now, let me give you some quick background here. They've got Maple and they've got Syrup. Maple 2021 came into existence and Syrup 2024. Now, it's only, if you're in the US, you can't invest, unfortunately, but everyone else can. Now, you can invest in the token. Don't get me wrong. The token is Syrup. We'll look at that in a second. I mean, using their app. So if we were to come over here and enter the app, you can see the 2 different, the Maple and the Syrup. And the Maple is primarily for institutional investors or accredited investors. And accredited investors basically means you have to have a certain net worth, make a certain amount of money. And if you pass those hurdles, then you can invest because they assume that you have a certain level of knowledge. That's why they call them accredited investors. So they think that not as much has to be disclosed to accredited investors. They should know what they're doing. Okay. And the other, Syrup, is really anyone. And that's what came along a little later. And I think that's one of the reasons that really made it take off a couple months ago, because they've introduced this new, not just institutional side, but now also the individual side. So you can get and obtain really good yields on your money. They are built on top of Ethereum, as most are. And that should make you feel good because as far as everyone knows, it is the most secure of the networks and has pretty much half of all of the value locked on chains on Ethereum for a good reason. Now, their chart going back to 24, there may be some past. I couldn't find it based on the other token before they converted. But looking at 24, they had a low here around April, which was pretty much, that was a low for Ethereum as well. Ran up to over 60 cents. Interestingly enough, this has a very different pattern than most cryptos, and I think this is good. I think it shows strength. Most cryptos, after they ran up November, December timeframe, they really came down, and they've been kind of trending sideways. You'll see some of the others we look at. So they've held their own at 40 cents. Where could this go? Well, let's compare it to some of the others market cap-wise, because they're about 400 million with assets under management, 3.3 billion. So next up is Clearpool. They provide to institutions loans as well. But what's interesting is they don't have over-collateralized loans. So they're unsecured and they have single borrower pools and they adjust for that lack of over-collateralization, or I should say security, in that they say that they adjust the rate. So they have risk-adjusted rates that they hope will balance out the fact that it's not over-collateralized. You can take a look at how they operate lending. This is their app or their interface. Total loans originated 840 million. Total value locked 84 million. Total revenue generated 500 million. Not bad. If we take a look at them on CoinMarketCap, they do have a max supply of 1 billion. Market cap is 132. They have about 80% of their tokens out. That's why they're fully diluted is 165. That's interesting to me. Now, clearly they have a lot less in loans and not a huge amount, 80 some million TVL. Just to verify, was that what it was? Yeah, 84 million TVL. That's a pretty low market cap. They're currently sitting at 16.5 cents. They had run up November, December timeframe. This is the kind of chart I'm talking about, where November, December really ran up, things came down, and we've been tracking sideways, and some have started to move up. Potentially it started to move up using some basic fib lines. It's at 16.5 cents. It had been up around 60 cents November, December. So 60 cents would be right up here at its 100%. You go to the 161, and that would be 90 cents. So even from 16 to 90, what's that, a 5x? And then potentially up to $1.41 here at 261, and it goes on. Much lower. It's only 1/3 the market cap, but it's doing significantly less volume. I should say also built on Ethereum. It uses Polygon. Goldfinch. Goldfinch is an interesting one. I've had many videos, a couple in the past, where I had bought into it. I was excited about it. I saw at least, this was probably in 24, late 24. Things didn't seem to be moving all that great in terms of their social media presence. They didn't have as many pools to lend out because they're lending to institutions. They are also unsecured, no collateral to businesses. They had a large, I think it was like a $7 million loan default. They say that they leverage on-chain data and off-chain credit assessments to evaluate borrower creditworthiness. So in this case, they are also an unsecured, not over-collateralized, but they're using off-chain data, if you will, like credit reports, that sort of thing, to try to evaluate the creditworthiness. Okay. That was the regular, I would call it the regular Goldfinch that was around 2020 when it was created. I don't think that part of the business really did that well, at least from what I could see. From my understanding, they only have about 7 loans out. So the loaning outside of the business doesn't seem to be that great. That's why I'd gotten rid of it. However, they came up with what they call Goldfinch Prime in 2025, not that long ago. You see here, they say total fund manager, 1 trillion. And you can see all these different places where you can invest. So their investment side of the business looks like it's starting to grow because they're giving you access to, these are private credit funds, large ones managed by other people. And as an investor, you can, through them, access these funds. So where the lending out of money doesn't seem to be really doing that well, I could be wrong. At least it looks like from their price, I think maybe what they've added, hopefully, will help them take off. They do have data going back pretty far. This is 24 and 25. Just throwing some fib lines on there with their lows back in 24 and their peak of $6. They're at 60 cents. If they were to hit $6 again, that's a 10x. You got a $9 at the 161 level. So let's take a look at their market cap. Market cap, 50 million. Fully diluted value, 70 million. Total supply, 114 million. So they've got a decent amount out, almost everything. But they really got clobbered and I think they got clobbered because the lending side of the business didn't seem to be holding up. There didn't seem to be a lot of movement. But now that they have this new Goldfinch Prime, maybe that will have it take off. We'll have to see. Extremely low. So of these three, we've got around 50 million on Goldfinch. Market cap fully diluted. We got about 150 million fully diluted Clearpool. It's like a 3x. And then from there, we're looking at 500 million on Maple Finance. And that's about a 3x in size. So 3 very different sized cryptos. Make your own decision. I always say I'm not a financial advisor. I'm not telling you what to do. Goldfinch could be a shot in the dark, and this Goldfinch Prime could make things take off. We'll have to see. CPOOL's interesting. I'm not the biggest fan of under-collateralized or non-collateralized or non-secured loans at the moment. Personally, of the three, I would go with Maple Finance. I still think, even though 500 million is much larger than the other two, I think 500 million is very small considering what they've accomplished and what they're doing. That's up to you. Have a great day. Please do listen to my crypto school, and I will have more videos throughout the week all about borrow lend protocols, which I think are going to be huge. Thanks for watching. Love how I break things down? Then hop into my crypto school. You'll get step-by-step courses on everything: buying, selling, staking for yield, borrowing, lending, even going fully debanked. Plus, join lively crypto chats and catch my daily market updates. And lastly, if you just want to help support the channel, there's a join button just below this video.